What's going on, everybody? My name's Dave. Thank you for joining me in this video. And if you didn't know what this is about, I'm about to review my dividends for the month of May. Stick around. What's going on, everybody? Thank you for joining me in this video. Today I'm going to review my dividends from the prior month, so for the month of May, and I'm going to go over a few key highlights about my Robinhood portfolio. And then what I'm going to also do is I'm going to take you into a website called trackyourdividends.com, and I'm going to show you the projected growth of my current account as is, assuming I'm reinvesting my dividends. And I will show you what that account is projected to be at the 10-year mark, the 20-year mark, and so on. And I'm going to adjust some parameters to show you exactly how much just 1 or 2% difference in a growth rate or a savings rate or a dividend rate can actually be for your account as time goes on. And come that time to retire, can add up to a lot of money in the right circumstances. All right, if you can see here, my first dividend for the month of May was paid to me on May 3rd. I have my app here. Let's see. Yep, there you go. So 30 days. It is up over here on the side, so you can see I'm going to do this to match it up with the screen that this is me in real time. But yeah, first dividend that was paid out was on May 3rd, 2021, and that was AT&T, or a dividend of $22.36. At the time, I owned 43 shares, and I was paid out a total of 52 cents per share. Now, the interesting thing with my AT&T dividend is I will not be receiving this dividend going forward. So I have decided to sell my position in AT&T. I'm not going to go over in great detail as to why, but if you've read anything in the news or seen anything in the news, AT&T is now going to split off with its media division, which would basically be like the HBO and HBO Max setup that AT&T basically owned, and HBO is going to be handed over to Discovery Plus. So you're going to see sort of this Warner Plus, Discovery Plus thing going on. It's pretty cool from a Warner perspective and an HBO perspective, but from an AT&T perspective, I decided to just end my position with them so far. So I've lost that dividend now going forward, and I'm going to take that money, or I've already taken that money, and I've reinvested it into some other assets going forward. Next item is on May 6th, I was paid a dividend from the Vanguard Total Bond Market ETF, or ticker symbol BND. This was for owning 16 shares of that ETF at 0.1306 dollars per share for a grand total of $2.09. Next dividend was paid on May 7th. This is from the iShares 0 to 5 High Yield Corporate Bond ETF, or ticker symbol SHYG. I own 21 shares of this at $0.1837 per share for a grand total of $3.86. Next item was paid off on May 10th. This is John Deere, or ticker symbol DE. I own only one share of John Deere. They're a rather expensive share, and they paid out a grand total of 90 cents. Next item is on May 14th. This is for owning Apple. Ticker symbol AAPL. I own 20 shares of Apple. They paid me 22 cents per share for a grand total of $4.40. Last but not least for the month, dividend payment from Realty Income, or ticker symbol O. I own 19 shares. You've seen this in the last video. Again, this is a monthly dividend, so that's why you saw it last video. You're going to see it again in this video. 19 shares at 23.5 cents per share for a grand total of $4.47. Going forward, I'm going to take you along and show you how to activate the DRIP system, or the dividend reinvestment system, through Robinhood. I'm going to show you right here on my app and walk you through it because it's super simple. And then going forward, Realty Income will just on a monthly basis reinvest back into itself through that DRIP system. So it's going to be some exciting stuff going forward. Now, what I want to take you all to see, actually, I'm going to do this first, Control Shift 5. So I'm here at this website again called trackyourdividends.com. What I really love about this platform is that it gives you an overall summary and a dashboard of your account. So right now, as you can see here in my account, I have my Robinhood account, which is just stocks, bonds, ETFs, just my normal assets. Okay, that's that $137. $137 and $648 total. Then I have I've linked just specifically my Robinhood crypto, and that is $32,662. I've created a test account here just to mess around with some things, but there's nothing in it at the moment. But these two combined show me my entire account value at this $170, $310. Right now, this is showing me that my entire portfolio is at a 0.81% dividend yield. Again, because most of what I have are growth stocks and cryptocurrencies. So it's a very low percentage of total stocks that actually pay me dividends. And a lot of the ones that I have are lower paying dividends. So I'm less than 1% right now on my money for a total dividend yield. And I want to get that up closer to 2 to 4%. My yield on cost is $1.24%. My annual income as of right now is $1,373. And this shows everything that I own as a whole. And then future value is this next thing that we're gonna go over right now, which I think this is a fantastic tool. Now, this is not a picture perfect tool. This is not going to tell you everything you need to know, and it doesn't truly predict the future. There can be market crashes or company fluctuations. A bunch of things can happen that can throw this number off. But the basic premise of this is you have this estimated dividend growth rate of approximately 4.44%. That's an input right now. I'm going to change this to 3. But typically you'll see a dividend growth rate on average of around 4% for companies that are solid in providing dividends. But I'm going to hedge myself on the low end here. Price appreciation, this is listed at 2%. Now, anyone that knows you invest heavily into the stock market, over the course of about 20 years, you will typically see an 8% yield on growth year over year on average. 1 or 2 years might be really low, 1 or 2 years might be really high, but on average, over the course of 20 years, you will see the stock market grow approximately 8%. And if you're diversified well enough and in the right places, you should typically see a very similar return on your price appreciation of the assets that you own, as long as they're following the stock market. I plan on doing just that. I follow the majority of my items, typically sit and grow within the confines of the S&P 500. Sometimes it's just like the top couple hundred companies, or it's a VTI that typically follows the entire stock market. And then I have a smaller percentage that are a bit riskier. So here I'm going to put an estimated 6%. Again, I'm going to hedge myself on the low end just in case I don't hit that 8%. We've been in a pretty bullish market for a while, so I can only assume at some point either a correction is going to happen or a crash is going to happen. Even though we've been saying that for a very long time, and it still really hasn't, with the exception of the illness that has just gone through. But again, I'm going to hedge myself on the lower end, and I'm going to put in 6% price appreciation here. Annual contributions, I'm going to say $6,000. I figure I could easily put $500 a month into the stock market to buy into new positions, old positions to just level up or level down, whatever the case may be. But I'm going to contribute a guaranteed $6,000 of my own cash every year to start for now. And maximum dividend yield is at 10%. I'm just going to leave that at 10%. This is assuming that I'll never touch a dividend that would have, I believe, greater than 10%. So I put this question mark here. Caps the dividend yield in future value projections. Yeah. So even though a dividend can grow 3% year over year, it's going to stop any one company's dividend from showing to be 10% or more, because it just typically doesn't happen and doesn't get that high. We're going to hit update chart and see what happens. So with this, my account that started at $170,000 would end up being $383,464, or a growth total of 125.16%. That's a big number. Is that almost double? What's 170 plus 170? 340, right? So that is over double. Yeah. Duh, 125%. So doubled plus a quarter. So yeah, you can see here, assuming dividend growth rate of 3%, price appreciation at 6%, I'm only putting in $500 a month. I know to some people that might sound like a lot. To some people that might not seem like enough at all, period. But this is what it shows like just with those assumptions in place. Now, if I change this to 20 years from now, so I'm 36, I'm going to be 37 years old this year. My goal is to retire way before I turn 60 years old. So I'm going to have this outlook at 20 years, okay? 20 years puts me at 57, assuming I live that long, right? And I live a long, healthy life towards that end. I want to know how much money I would have at approximately 57. It's still a good age. It's still sort of the prime for some people. I don't know what it's going to be for me, but it is still before retirement. This is how old basically my dad is right now. So I want to know, what can I have at my father's age at this moment if I continue on this track? And that number turns out to be $857,330, or a growth of 400 and almost 4%. That's a big number. And those were small adjustments here. So I'm going to go back. I'm going to run this same model real quick, and I'm going to go and look at something that's a bit more realistic in terms of growth, at least in terms of what history has shown us to be true. I'm going to take those hedges off and just see what's possible, and we'll go from there. First, I'm going to go back. I'm going to reset to 10 years. And then the only thing I'm going to change is what I can contribute. So I'm going to keep dividend growth at 3%. I'm going to keep price appreciation at 6%, maximum dividend yield at 10%, and then I am going to put my annual contributions at $12,000 a year, assuming I can put $1,000 away per month. Now, remember, I keep saying I, but this is really my fiance and I. She works full time. I run our own business, so I'm working technically full time, and then this is a side hobby at the moment to just review the things that I do and how I am growing my money and investing. So assuming we both could take $500 each a month and put it back into the stock market, in just 10 years, that puts us at $454,781, or a growth of 167%. Now remember, before that was 125. So we've increased our growth by approximately 42% just by doubling our contributions. That's a big number. Let's move this out to the 20-year mark and see what happens once I reach my father's age at this moment. $1,084,482, or an increase of 536.72%. There it is. There's $1 million, folks. I take $1,000 a month and I put it into the stock market that generally mimics the growth of the stock market in the S&P 500, which is only at 6% right now, but also has dividends and grows it 3%. So whatever my portfolio looks like right now, my account could be and should be approximately $1.1 million by the age of 57. That's not too shabby. Not only is it going to be in $1 million account, but my dividends will start paying me $15,000 a year. Now, I don't know what your number is. I have a general idea right now what my number is. Just to pay the bills and be comfortable, I really only need my money to pay me about $40,000 a year. That's it. To pay bills, to pay taxes, to have some spending money. Bills are paid. Debt is almost gone. I think I only have about $6,000 left total debt. So at that age, I really only need about $40,000 to live comfortably on. And you can see, though, this $15,000 isn't there. This only pays for just under half of that. So that's why I want to continue to increase my portfolio diversification and get into more dividends. I need to have more dividend paying stocks, so that way, by the time I want to retire, my accounts start to pay me $35,000, $45,000, $50,000 a year or more. Like $40,000 is pretty much the low end that I'd be okay with, because that would basically just be covering the bills. That does not include 401k and retirement or anything else like that. This is just my Robinhood account. So I would want this account to be the account that pays me $40,000 a year and covers all my bills, and then everything else, That's toy money. That's play money, okay? So we're going to go back. We're going to reset again. Reset to 10 years. We are going to go back to a $6,000 contribution. I'm going to take the dividend growth back to 4.44. And then I'm going to take the price appreciation and I'm going to change that to 8%. So again, stock market typically on average grows about 8%. Dividend growth on the norm is about 4.44%. But I'm taking back to only $500 a month contribution, and we're going to see what happens in 10 years. In 10 years, $448,999. That's almost the same number as the last model when I was putting in $12,000 a year, but those two inputs were just slightly off. So a 2% change in growth for the stock price or a 1.44% change in dividend growth rate has made up a massive difference in my portfolio. Now let's take this out 20 years, right? At age 57, my account would now be worth $1.2 million, and that's only contributing $6,000 a year. That is huge. I'm now up to a $22,210 annual income from my dividend payments. Let's change this one last time to see what this account would look like at a $12,000 contribution annually, or $1,000 a month. Again, dividend growth rate 4.44%, price appreciation at 8%, annual contributions at $12,000, and a maximum dividend yield at 10%. This is going to be huge. $1.5 million, and it will pay me $27,378. Now, like I said, the minimum I would need to just cover bills is probably close to 30 grand. I want to have 40, 45 to play it safe. But if I'm just talking about taxes, about 6 grand a year, something like that. Electric bill, no, in Florida, electric bill could be huge. So, that's going to be a couple $1,000s for the year. Cell phones, gas, internet, television. Am I missing anything else? I have well, so I don't have to worry about water. I'm good there. I have a septic tank. I don't have to worry about sewer. I'm good there. So yeah, $30,000 is plenty. This $27,000, in all honesty, I need to write it down because I haven't done my budget in a while. But I'm pretty sure at the moment this $27,000 per year annual income and just dividend payments would pay every bill I have with a little extra. So I am ecstatic to see a number like this, and I advise every one of you to go out and just try this out. Plug in some parameters, link one of your accounts. This I was able to actually link my Robinhood account to this dashboard, which is why it just pulls all the information in. It doesn't pull the cryptocurrency, so I had to go in and make a manual account for my Robinhood crypto and just tell them what I owned, and then it keeps track of the current market for those cryptos. For whatever reason, it won't pull that out of Robinhood, but super simple to do. Only took me about 15 minutes to set up this whole thing. And I now can see where my growth, for the most part, should be each year, year over year. So now my goal is to come in here and say, okay, well, my portfolio value is at $170,000 2021. In 2022, it's expected to be at $197,000. Now my goal is to beat that. My goal is to potentially put more in of my own cash. The more I make, the more I'm able to, without going, cash poor, is to put more money into that than just that $197,000, and also put more of that into dividend stocks so that I beat the expected $1,561 in anticipated revenue. Or annual income, I'm sorry. So my goal now is to beat this. So if I have this marker, I now have something to exceed, not just reach and achieve, but to exceed. That's the goal, is to go above and beyond and to beat it. So that way, come 2029 or 2030, maybe I'm getting much closer to that whole, I can start having my money work for me. It just depends on what position that you're in, your personal environment in your situation. Everyone is going to be different. Not everything is going to work for everyone. This isn't me telling you what you should do and what you have to do. Again, I'm not a licensed professional. This is for you to be able to have tools at your disposal, to understand what does your path start to look like, and just help guide you in a direction. You'll have to do a lot more research than just the few videos that I'm going to put out or will continue to put out. But find a tax professional in your area, CPA, someone that could really get personal with your specific situation and help guide you along on this journey. But this is just one of the many tools that are out there that can really show you the power of your money, the power of compound interest, and what your life and your financial situation could start to look like in the next 10, 15, 20 years. Pretty awesome stuff. Start now. The sooner the better. If I would have known half of this stuff when I was 15, 16, I would have been saving my money until I turned 18, and I would have started investing in these things at 18. I didn't really start this stuff till pretty much age 30. Somewhere around age 30 is when I really started to invest. And in that amount of time, I think I've done pretty well. I could have done better, and I could have done much better if I started earlier. So don't let the unknown scare you to the point of just not trying. Get out there, learn as much as you possibly can, seek out a local professional that can help guide you, and start. That's the best advice I or anybody else could possibly give you. If you like this, I appreciate you sticking around to the end. Thanks for hanging out. Hit that like button, hit that subscribe, hit that notification bell up in the upper right-hand corner for you guys there. It really helps the YouTube algorithm out. It helps me know what do you like, what don't you like. And most importantly, if there's something that you want to see come out of this channel, add something in the comment section below and let me know what it is that you want to start to see. I'm definitely gearing more on the finance side of things. My business is still a reselling business. I still find things and I flip them online for profits. That's the business that I run now. I'm still going to make content around that, but I'm going to gear most of my content more on the finance side of things versus just the day-to-day, here's what I normally do to work side of things. And that's just preference in terms of I want to be able to really start focusing most of my content around making money, building wealth, and building that freedom going forward. So if there's something you want to see specifically, drop it in the comment section down below. And I appreciate everybody sticking around to the end, and I will see you in the next video. Peace.